Hey guys, what's up? It's StockWiz here. Today I wanted to talk about the best stocks to buy in February of 2022. These are going to be high growth stocks. Some of these have been hit 50, 60, 70, 80%. And again, we've seen this kind of turmoil in the stock market for small market caps and also the S&P 500 over the last month or so since 2022 really started. This has kind of been a flip from what we saw last year, where in February stocks are at all-time highs. Volatility was going through the roof, right? Now we're seeing the same volatility, but in the opposite direction. I don't want you guys to be a few months down the road or a few years down the road and look back at this time, February of 2022, where we saw some of the craziest dips in these stocks that we've seen in a very, very long time and not take advantage of it. Because boy, there's a lot of FOMO that goes around once those stocks hit those all-time highs or double or even triple. So let's go ahead and talk about those stocks that I got on my watch list. But before we get into that, you can get 2 free stocks valued up to $2,300. Go ahead, use the link on the screen right now. That's bit.ly/WizStock. The first stock we're going to be talking about is DraftKings, one of my favorite stocks. Is currently trading at $23.88. The all-time high for this stock was almost $72 in March of 2021. So we've definitely come off of those highs, and this is a buying opportunity for that stock, especially if you like that company in March of last year. Then why wouldn't you like the same company right now? They're in the same position, if not a better position than they were last year. I do own a little bit of DraftKings, and I don't plan on selling it anytime soon. Now, DraftKings, if you don't already know, it's basically an online betting sports platform or an online fantasy sports platform where you can bet and compete with your friends, or bet on a sports game like in the NFL or the NBA. You put $50 on a team to win and you get paid out. Fantasy teams are also very popular, so if you have a fantasy team and you're competing in a pool of people or with your friends and you get the lowest score, whatever the case may be, there's some pretty interesting punishments that people get to do. Now, another thing to mention about DraftKings is that we've seen some insider buying with DraftKings, millions of dollars worth of shares, so that's something to look at. When insiders buy into their own stock or their own company, they do that for one reason and one reason only, and that's because they think the price is going to go higher. Now, the logic behind that is kind of the opposite of why an insider would sell. There's a lot of reasons why an insider would sell. There could be a more interesting investment, or the stock price could be going down. They could be paying taxes. There's so many reasons why an insider would sell, but only one reason why an insider would buy. And that's one of the reasons I have even more conviction in this stock. The next one we're talking about is ChargePoint. It's trading at $14.26, went up 3% today. Over the last week, we've seen a 10% rise in its share price, but boy, it's gone down quite a bit. I bought in this stock at around $20, and I thought I got it at a discount. At the time, $20 was, the low point for this stock over the course of the last year. The high was $40. ChargePoint, if you guys don't know, it's an electric charging company. So they have a bunch of EV charging platform stations. They've made a lot of acquisitions, and they have a lot of contracts with some cities, towns to place their charging stations at malls, strip malls, stuff like that. I'll put up a picture on the screen right now. There's going to be so many things that are changing over the next few years, and I think electric charging is going to be one of them. It could be hydrogen charging in 10, 20 years. At this point, it's electric charging in my personal opinion. I really like ChargePoint, so that was my second stock. Now let's go ahead and get into the third one. Palantir is next on my list. Now, this stock is very popular among the meme community, you could say, and on Reddit, Wall Street Bets. Palantir has been around there. So $14, it's down around 20%, 22% this month. Over the last 3 months, 46%. At this point, it's too low to just ignore. Now, eventually, I think Palantir could deal with the big dogs, really compete against them like Lockheed Martin, Boeing, some of these companies that work for the government. And I should clarify that Palantir is one of those government contract companies. They deal with the Department of Defense. A lot of the stuff that they do is classified. Palantir also just announced a strategic partnership with Satellogic Inc. The partnership is expected to accelerate the capabilities both companies can provide to customers in the field, combining technologies in satellite imaging, edge AI, and data-driven decision-making. The Foundry platform is essential to the U.S. military and to the governments that allow them to conduct missions. The combination of artificial intelligence and Palantir is one of the things that has me really excited. I think artificial intelligence is one of the big pillars over the next couple of years, or over the next 10, 20 years, I should say, that's going to be really game-changing in the industry. Let's get into number 4, Corsair Gaming. Corsair Gaming is one of those stocks where it just goes lower and lower. This is at a price $20. This stock has gone up 8 to 9% over the last few days, but it's still very low, and you're buying this at a discount. If I show you this graph right here, it's just a straight line down. Like, you can't buy this stock any cheaper other than what it was at yesterday. Now, Corsair Gaming also owns Scuf Gaming and Elgato. Those two companies are basically accessories for PCs, Xboxes, and I think gaming is one of those industries that's set to explode over the next 10-20 years. Now, I know I sound like a broken record when I'm talking about things that are set to explode, but the amount of progress that we're seeing with the metaverse, games that are becoming more and more realistic, you could actually be there, and the professional gaming community, Major League Gaming, Twitch streaming, that is so popular. Millions of people watch Twitch streamers and Counter-Strike, Fortnite, whatever the next game is, there's always going to be a next game. And I believe, these gaming companies are in a great position. Now, the last stock we're talking about is STEM. They're an energy storage company. They're trading at $12.63. Look at this graph. Absolute mayhem, destruction. You can't buy this stock at any lower prices that you're seeing today, ladies and gentlemen. But what they do, they have a program called Athena. Now, Athena is this artificial intelligence program that basically tells a company like Facebook, for example, that uses STEM, when to switch from different grids, different electric grids. So if they're using solar energy, to switch from that to the common grid, and basically saves Facebook as much money as possible using this artificial intelligence Athena platform. So I may have butchered explaining that, but that's basically what it is in a gist. Now, I've had this stock since February of last year, and one of the things that I remember about last year is in Texas, I believe it was Dallas or Houston, there was a huge snowstorm and a lot of electrical grids got completely cut off, and there was a need for energy storage. And that's one of the things that actually boosted this company into the forefront of energy storage companies. That's why I really like this stock. I think it can also be a momentum play if we do see something like that where entire grids of cities are blacked out. But that pretty much wraps up the video. I hope you guys enjoyed it. Please tell me what you guys think down in the comment section down below. Use the link on the screen, first link down in the description, if you guys want free stocks. I'll see you guys in the next one. Peace.